Well, hi everybody. This is Scott Richards, your insurance guy, and today we're talking about hospital indemnity plans. What are they, and how can they possibly help you out? We're going to be at the whiteboard today. I'll be telling you a little bit about how they work, how they can help, and how it might be beneficial to you in the future. So you're on your Medicare Advantage plan, and you're probably paying $0 a month premium, which is perfect, saving some money. And that's great. And one of the concerns that people have is what happens when they actually go and use it, those co-insurance payments, specifically when you go to the hospital. So here in Arizona, most of the plans are going to start kicking in after about the 5th or the 6th day of a hospital stay. And coincidentally, the average hospital stay of an adult 65 years or older is actually 6 days. They do that on purpose, I guess. So for most of the plans, you go into the hospital and you're going to pay about $300 a day per your plan. And that's going to be for about the first, let's say, 5 or 6 days. So that's like 5 or 6 days. And that, for a lot of people, can be a pretty big problem because if you do your math, you're looking at $300 times 5 or 6, looking at about a bill of about $1,500 to $1,800 for those first couple days that you're in the hospital before the plan's going to kick in and take care of everything. And, you know, if you do go to the hospital, chances are you're going to have an ambulance ride that's going to go with you. Ambulance rides go for about $250 for a trip, and you're probably going to have an emergency room visit. Let's go for $90 a trip. You know, so I start doing some of my math, and a trip to the hospital for an average person, we're looking at, you know, that's about $300. You know, we're looking at about, you know, $2,000, about $2,100 bill coming in the mail when you get home. And for a lot of people, they don't have $2,000 to just write a check and send it off to the insurance company to cover it. So that can become, you know, a bit of a problem. So how do we, you know, solve that problem? How do we head that problem off? And we do that with a hospital indemnity plan. So what are they? Well, basically, it's a plan that you can add on for a small monthly fee that's going to cover some things. For instance, I was running some numbers. And a plan, if we were going to purchase a plan, a 6-day plan, that's going to pay you $300 per day that you're in the hospital. Now, we don't want to really go above 6 days because we try and match our days with our plan, so 5 or 6 days. So if you're in the hospital for 6 days, it's going to pay you, it's going to give you that $300 a day. And you can even add in an ambulance trip. If you do have to take an ambulance, the plan will give you $200 for that ambulance ride. So in a hospital indemnity plan, if you do have to take an ambulance, emergency room, you do have to spend some time in the hospital, what's going to happen is that plan is going to cut you a check, not the doctors, not the hospital. They're going to give you a check for about $2,000. Now, what do you do with that $2,000? Well, you know, use it to pay that hospital bill. So if in fact you do have a hospital stay, you know, you've got backup to help pay that big payment that might be coming down the road. Now I did some, initial, I ran some numbers just to give you an idea. So for a 71-year-old, male or female, 6 days of coverage, $300 a day, kind of like what I wrote down here. Ambulance coverage for $2,000. That's running about, you know, about $40 to $43 a month of coverage. A little younger, 67-year-old, same thing. Plan's going for about $36 per month. So if we do some math, I know math isn't really fun, but if we do some math, and I kind of did some math, and you did the $2,000 of coverage, and you divide it by the $35 a month, that's about 4.7 years before this $35 is going to catch up to your $2,000, meaning, you got about 4.7 years before you're at like your break-even point where you're not coming out ahead of the game by the amount of money that you're putting in. For instance, you get this plan, and you have it for 2 months and you've spent $70 total, and you go to the hospital, they're going to give you the $2,000, so you're coming out way ahead. So you got about 4 to 5 years until you hit that break-even point for your payments. So if you think, gosh, there's a good chance I could have a hospital trip or a hospital stay in the next 4 to 5 years, and I don't want to get that big bill that I'm gonna have to cut out a big check for, maybe a hospital indemnity plan is the route for you. Maybe it's good for you to look into. I'd love for you to just give me a call here at the office. Number's going to be below. Links to get a hold of me. We can discuss it, and we can find out exactly how much and what a hospital indemnity plan could do for you, and we could get rid of that big monkey on the back. All right, thank you so much. I appreciate your time. My name is Scott Richards. I'm your insurance guy, and I can't wait to talk to you. Have a great day.